Okay, let's unpack this. We're diving into a really interesting story today about Warren Buffett, the investor,
Hmm.
When most people think about big money going into electric cars, EVs, well, Tesla is usually the first name that comes up. Right?
Almost always, yeah.
But years ago, I mean, long before Tesla really blew up, Buffett made this huge bet on an EV company. And maybe surprisingly for some, it wasn't Elon Musk's. It was China's BYD.
And looking at the information, the sources you shared, that move seems incredibly insightful now, almost prescient, you could say.
Exactly.
Right.
So the mission for this deep dive is really to sort through this material. We want to understand the why. Why did Buffett pick BYD? Especially when he was, well, deliberately not picking Tesla.
Right.
And what is the outcome of that investment? Tell us about his long-term strategy. And maybe the biggest thing, what does this whole story reveal about the big shifts happening in the global EV market right now?
Yeah, and it's not just like looking back at one good trade.
No.
It's more about understanding the kind of future one of the world's, well, sharpest investors saw coming in a really hyped up sector too, and seeing how that forecast is actually playing out today against the headlines. It really highlights a kind of a crucial turn in the EV world that's maybe easy to miss if you're only watching the loudest players.
Absolutely. So let's jump right into the first move, that contrarian bet he made.
What really stands out is the timing and the sheer conviction, right? Berkshire Hathaway bought, what was it, nearly 10% of BYD way, way back in 2008.
2008, it's hard to even picture the EV landscape then.
Exactly. And that was for about $230 million. A lot of money then, sure, but peanuts compared to what it became. And we know from the material that Charlie Munger, Buffett's partner, was a huge driver behind this.
Oh, yeah, the famous story.
Munger apparently told Buffett he twice pounded the table and said, buy BYD. He clearly saw something really significant very early on.
He certainly did. And the contrast, it's just so stark. Around the same time he's getting into BYD, he's very publicly not getting into Tesla.
Right.
Even with Elon Musk basically saying, hey, Berkshire should invest, Buffett just wasn't biting. That deliberate choice, steering clear of the hottest EV name, that tells you a lot about how he thinks.
It really does speak volumes. And the payoff from that early conviction is, well, it's huge.
Yeah.
That initial $230 million, it grew over, 15 years or so to be worth somewhere between $6 and $8 billion.
Incredible.
And even though Berkshire trimmed its stake a bit in 2024, the reporting suggests that was just, taking profits, cashing in on a massive win, not because they lost faith or anything. The core investment itself was just a phenomenal success.
So the big question then is, what did BYD have that fit Buffett's classic investing style? And just as key, why didn't Tesla, with all that buzz, make the cut for him? That seems central to this whole thing.
Well, Buffett's approach, as you know, it's incredibly disciplined. It's all about value. He likes businesses he understands. Companies with stable leadership, real, durable, competitive advantages, moats, as he calls them, and predictable, solid returns on the money they invest.
And he's always been a bit skeptical of the car industry generally, hasn't he?
He has. Historically, he's seen it as super capital intensive, needing huge amounts of money, and very cyclical, up and down, which makes getting those consistent, predictable profits really tough.
And the sources we looked at are pretty clear. For Buffett, Tesla just didn't check those boxes. He didn't see the predictable returns, maybe not the kind of durable moat he looks for, not like he saw it somewhere else.
Exactly. And it wasn't just Tesla he avoided. He's mostly stayed away from other big U.S. EV startups too, like Lucid or Rivian.
Right.
The worry there, often mentioned, is their high burn rates. They're just spending cash incredibly fast. And it wasn't clear they could really scale up manufacturing efficiently. BYD, though, even back then, looked different. They already had experience in mass manufacturing, they were focused on cost, and they were starting to build a global presence.
Okay, so let's fast forward to now, because the sources paint this picture of a pretty significant shift happening, like right now in the market. BYD seems to be surging, while Tesla's facing some headwinds. Let's get into some of the numbers that really show this.
Yeah, the figures are quite striking, actually. In March 2025, so very recently, BYD actually overtook Tesla in quarterly automotive revenue for the first time ever.
Wow, okay.
And while pure battery electric vehicle sales, BEVs, were pretty close globally in 2024, BYD sold about 1.76 million, Tesla 1.79 million, so very tight.
Feel close, yeah.
The bigger picture is in total new energy vehicles, NEVs. That includes plug-in hybrids, which BYD is huge in. And in 2024, BYD sold, get this, 4.27 million NEVs.
3.27 million.
Yeah. I mean, that just blows Tesla's total vehicle sales out of the water. It shows they're playing in a much wider part of the market.
Yeah, that's a huge difference. And that trend is even popping up in places like Europe now.
It is. In April 2025, BYD actually outsold Tesla in pure BEVs in Europe for the first time. Not by much, 7,231 to Tesla's 7,165, but still, crossing that line is a big milestone.
Definitely. And meanwhile, Tesla's hit some speed bumps.
Yeah, they had their first ever drop in annual deliveries last year. And Q1 2025 deliveries were down, 13%? Analysts are even talking about another potential year of contraction for them.
Why is that? What are the reasons given?
Things like factory halts, delays rolling out updated models.
Yeah.
It's all happening just as the competition is getting really fierce.
And you see this reflected in the stock market too, right? First half of 2025.
Absolutely. Tesla shares were down over 20%, while BYD's stock listed in Shanghai was up significantly over 22%. Quite a contrast.
So what's behind BYD's surge? What are these competitive advantages that Buffett might have seen way back when that are paying off now?
The sources really point to a few key things. Practical car design, a relentless focus on keeping costs down, and, maybe most importantly, their own battery technology, specifically the Blade battery.
Okay, let's pause there because that sounds really important. Vertical integration and Blade battery. Can you break those down a bit? Why do they matter so much for BYD?
Great question. So vertical integration, just think of it like this. A lot of car makers buy their key parts, especially batteries from other companies, right? Suppliers.
Yeah.
BYD, though, they design and make most of their critical stuff themselves, including their own batteries. This gives them massive control over their supply chain and, crucially, their costs.
Okay, so they make their own stuff. And the Blade battery?
That's their specific battery innovation. Instead of packing lots of small battery cells into bigger modules like most others do, they arrange these long, thin battery cells, they call them blades, directly into the battery pack itself.
Ah, cutting out a step almost.
Sort of, yeah. It makes the whole pack simpler, potentially safer, and the big one, cheaper to make.
Got it. So making their own batteries and using this simpler, cheaper blade design, that's where this margin flexibility comes from that the sources mention.
Exactly right. Because they control the production and have this cost-effective design, they just have more wiggle room on price compared to competitors who are buying maybe more expensive batteries from someone else.
And that flexibility must be huge right now.
Oh, it's enormous. Especially with the price war going on, it lets them launch these really successful, genuinely affordable models like the Seagull or the Dolphin. They're pushing prices way down below $30,000 in some cases. That opens up the EV market to a whole new group of buyers who were priced out before.
And that ties directly into this EV price war we're seeing everywhere. The sources mentioned Tesla kicked it off early 2023, but the Chinese automakers, especially BYD, they hit back hard, didn't they?
They did, very aggressively. And that price war, well, it squeezed profit margins for pretty much everyone in the industry.
But BYD was better placed to handle it.
That's what the sources suggest. Because of that vertical integration, that control over battery costs, they seem to have kept healthier profit margins compared to rivals who felt the squeeze much more intensely. You see that pressure, particularly on Tesla's margins in places like Europe and China.
Now, the sources also bring up another factor, maybe a softer one, affecting Tesla for some buyers. What's that about?
Yeah, it's mentioned that some market feedback suggests Elon Musk's, let's say, growing political involvement and sometimes polarizing public statements have actually put some potential buyers off.
Interesting.
Leading to protests or boycotts in some areas, according to the material. It just adds another layer, another dynamic to the competitive landscape that wasn't really there a few years ago.
So if we zoom out again and look at their global strategies, they look quite different too, don't they?
Very different. Tesla has largely focused its main efforts on North America and Europe, big established markets.
Whereas BYD seems to be on this incredibly fast expansion drive, moving into Latin America, Southeast Asia, and pushing harder into Europe too, often using local deals, local manufacturing partnerships.
And why is that working so well for BYD? The sources point out that this local approach helps them get around potential tariffs, for one thing.
Makes sense.
But maybe more importantly, it lets them offer cars that are specifically tailored to local tastes and, crucially, local price points. That strategy is just perfectly suited for many emerging markets and also for the more cost-sensitive buyers in developed markets.
So even if subsidies or tax credits change.
Exactly. Even with those shifts, BYD's fundamental pricing advantage makes their EVs accessible in a way that Tesla's more premium cars often aren't, even after Tesla cut its own prices. They're grabbing share in segments Tesla struggles to reach.
Now, if we put this BYD investment back into the context of Buffett's wider thinking, you start to see a pattern. But it's not just his one EV bet in isolation.
That's a great point. It fits very neatly into his, broader conviction about the whole green energy transition. Berkshire Hathaway Energy, another big piece of his empire, is a huge investor in solar, in wind power, in grid infrastructure.
So he's betting on the shift to a low-carbon economy from multiple angles.
Absolutely. He sees the long-term value there. Sustainable energy, sustainable transport. It's a consistent theme.
And it all comes back to that Buffett quote you mentioned. We only swing at pitches we like.
Smidges.
His decision to go big on BYD, while consistently saying no thanks to Tesla, despite all the noise, all the hype around Musk. It really feels like a textbook example of sticking to his knitting,
Completely. Focusing on value, on cost advantages, on business models he could really understand, even if it meant ignoring the loudest, most talked about pitch in the market at the time.
Yeah, it seems clear from the sources. Buffett didn't miss Tesla. He just made a different choice. A deliberate, calculated play based on his read of market dynamics and competitive strength.
And based on the numbers, the trends we're seeing today, that early bet on BYD is looking like a, arguably smarter, more fundamentally sound long-term investment, rooted in capturing the mass market, controlling costs.
So the big takeaway, wrapping this deep dive up, seems to be that Buffett's hugely successful BYD investment wasn't about following the hype. It was pure Buffett. Value, cost-advantaged strategic positioning.
A masterclass in long-term thinking and clarity, really, especially in a sector that can be so driven by speculation.
And it definitely reflects this massive shift we're seeing in the global EV market now towards affordability, towards cost-effectiveness, with companies like BYD really leading that charge.
Which leaves us with a final thought, something for you, the listener, to chew on. How might those key factors driving BYD's success right now, that intense focus on cost, the deep vertical integration, the tailored global expansion, how might those offer lessons for looking at competition in other fast-changing, capital-heavy industries?
Good question. Beyond just EVs.
Right. What does this deep dive into Buffett's play maybe suggest about how we evaluate disruptive technologies? How do we spot genuine long-term value versus just, riding the wave of market excitement? Something to think about.